Welcome to Mavericks. I'm Joey Garcia, and in this episode, we'll be speaking to one of the foremost voices in blockchain policy. She's a hugely influential figure in the finance sector globally and is head of international policy at Chainalysis. She's a true pioneer and a maverick. It's Caroline Malcolm. This is Mavericks, brought to you by Xapo Bank. All right, well, Caroline, it's awesome to have you here on one of our Maverick shows. But I wanted to start things off with an interesting question. So I was reading a bit about you, background, etc. And you're in the blockchain and crypto universe now, Chainalysis, etc. So the expression that we often hear, to the moon, I think when you were young meant something very different. I think you wanted to be an astronaut.
That's true, Joey.
So
I did.
how did that story unfold? How did you go from the wish of being an astronaut to where we are today?
Yeah,
in 2 seconds. I'm kidding.
I worked out that I wasn't very good at science, Joey.
Okay.
That's where that dream ended. And from there became a lawyer, and found myself many years later in crypto.
Incredible. That's been and before that, I said before the position that you have today. I mean, you did a lot of stuff. I think with the OECD, and I think you were the founding head of the global blockchain policy working group, and that was 2018 or so, right? So.
Yes.
How did that happen, or what was the position or the trigger for that event, or how did that unfold?
Yeah, so it was a bit unexpected. Also for me, I had my background as a tax lawyer, and I had been working on a project for the G20 on digital platforms, new ways of doing business, and how they were upsetting the traditional approaches to tax. That project had a couple of month pause. So I was thinking about how to keep myself busy during that time. And it was around the time where we started to have the ICO boom. So there was a lot of interest also from a tax perspective, a lot of people making a lot of money. And so I decided to sort of, just for my own interest, I started a course at Oxford to understand a bit more about the technology, and started to talk to a couple of the tax administrations, and there weren't many at that time, who had put out guidance about what you do if you make money or lose money on Bitcoin, what it means for your tax position. And then in those conversations, really realizing that there was a lot of uncertainty about how to treat crypto just for tax purposes. And so that kicked off this project, which was part education and part survey on tax treatment of crypto all around the world.
And that was because I think it was you were covering policy implications. Was it all tax, or was it beyond that?
So I was still in the tax department at this stage, became more and more interested. And around the same time, the OECD had taken this decision to set up an AI observatory. And the head of the OECD's business division at the time Greg Medcraft was quite interested in blockchain and crypto. So I worked with him and managed that to, there was an agreement that they would also set up the Blockchain Policy Centre. And so that's when I left just focusing on tax and crypto to take on a much broader portfolio of everything crypto policy and blockchain policy related.
Super. And that's amazing. But from there to sort of where you are today, I wanted to start off with like a question I'm sure you've answered many times, but you've joined the Chainalysis group, blockchain analytics. I think the starting point when people talk about virtual assets or crypto generally, it's always like, or at least it was years ago, this is all like crazy, it's all money laundering, it's all illicit, and no one really understands the tech, like super high level. What do you see as that group, Chainalysis, being able to do to, I don't know, hold, control, monitor, supervise, maintain? What are the special features of data analytics or blockchain analytics that exist for people who don't fully understand? Many people will, but yeah.
Yeah, so it's incredibly different from, other systems, whether it be, sort of traditional finance or other sectors. And it really comes down to both the sort of transparency and the immutability of the underlying tech. And that means that we are able to see what's going on in the space. And the way I kind of try and make an analogy for people who are perhaps less familiar with the space is it's a little bit like having a map of the city. So, all the transactions are transparent, but it's like having a map of the city, but you don't have any street names and you don't have any names of the buildings. And so what blockchain analytics firms like Chainalysis do is provide this overlay to help people navigate the city, which provides the names of the streets and the names of the buildings. What we don't do is we don't provide the names of the people living within those buildings or the people on the street, to continue the analogy, but we provide that overlay just to help people navigate the space, to say, well, that building over there, that's Coinbase, or that building over there, that's Binance. And so just to help people understand the kind of the key landmarks, and that can be, as I said, it can be services like crypto exchanges, but it can also be on that illicit side. So darknet marketplaces, for instance.
Yeah. And it's sort of even, I suppose, the simplest equivalent would be in the sort of bank context. You turn up with your £20 or $20 to make a deposit, and the bank literally looking at every single transaction relating to that $20 note since it was printed.
Yeah, exactly.
And is that, do you see like more of the industry or more of the authorities understanding that more and more? Is it making the world understand the use of this technology from a compliance perspective? Is that a sort of emerging thing? Are people now gradually starting to accept that it does exist? Or
yeah, we're definitely a lot further along the curve. So if I think back to the start of the Blockchain Policy Center in 2018, through 2019, it was hard work to get people to return my calls, to be like, to governments, being like, I want to talk to you about crypto, about blockchain. This is important. I think we need to be paying attention. And there was work obviously going on in the anti-money laundering space, but there was very little going on elsewhere. That started to shift, I'd say, around 2020. And today, a couple of years on from that, governments are very engaged. That doesn't necessarily mean that they're all ready for action or they've taken action, but they're certainly much more engaged, and they actually have a much better understanding of the sort of underlying tech and a little bit about, how things are different. But it's still really, it is very revolutionary. It's a very different way of thinking about things. So there is still some
So let me ask you something else, because one of the things that you guys do, which is fascinating, is this sort of global adoption index.
Yeah.
And everyone reads that year on year, etc.
Everyone's always surprised. No one can ever guess. When I ask people who's number one in the world, no one ever guesses.
It's true. It's Vietnam at the
Vietnam,
top.
exactly.
Which is it's incredible. And sort of to put Vietnam, not specifically that country, but that territory. I think the emerging markets seem to be dominating the adoption index at the moment.
Yeah, that's absolutely true. So we have the adoption index combines both sort of CeFi, P2P, and DeFi. And when talking sort of in generalities, but generally, emerging economies have stronger in CeFi, less strong in DeFi, while advanced economies, it's more DeFi than CeFi.
Interesting. And then, but in what was also interesting, or let me ask you a question: Why is the adoption index why is it so high in those countries? What's the primary function or use of the technology or asset in an emerging country, an emerging market that's different from a more developed market? What are the primary drivers?
Well, look, I think, one of the realities of DeFi is that the user experience is still, not where it will be in a couple of years or even in a couple of months. And that means you have to have a certain degree of understanding of technology, of code to be able to sort of engage with it really effectively. And I think a lot of the use cases we see, and you see this in terms of the patterns of, say, stablecoin usage in emerging markets, that, things like the remittance use case is much more dominant there.
Remittances have got to be one. Is sort of currency stability another? Is that sort of access to a stable coin or access to a USD account, whatever it might be? Is that a driver as well of adoption in countries where there's less trust or belief or in that government or infrastructure? Yeah,
look, it's hard to say what people's motivations are, but it is clear that in countries where you have greater volatility of the domestic currency, you do see greater stablecoin usage as a way to preserve value in those very variable markets. And I think the other thing you see is kind of some of the newer use cases, things like NFTs or gaming and so forth.
That's exactly I mean, I saw that and it was unbelievable, actually, the volume on the NFT side of things and on the play to
particularly
earn.
Southeast Asia. I mean, the Philippines, Thailand, Vietnam, these are all really big markets.
Incredible.
For those,
It is incredible. And that's happening, and the adoption is happening at different rates. And then obviously you get to sort of what are the halting sort of blocks to those adoption levels escalating, or more commercial adoption, or larger percentages of the world. Lots of people say different things. Some people say regulation or law or infrastructure or policy or whatever it might be. Some people say trust in that counterpart. And that sort of brings us to a bit around where we are today. Everyone knows about the FTX related stuff, but where do you think that as an event has affected the industry as it exists today? Super general, open question. But
look, it's. I think there's no doubt that trust has been broken, and I think kind of first and foremost is needing to keep in mind the people who have all been kind of directly affected by what's happened. For the industry more generally, this is I think a significant challenge. It is at a time when the sort of tagline of blockchain has always been trustless. Trust not required. And that's really under some pressure at the moment. And there is this sort of, I think it's easy to kind of turn to, well, this is about CeFi, this is not about DeFi, but I think this is a little probably too simplistic. I think the reality is that what from the little of what we know, is still in the early weeks after the events, and still seeing a lot of fallout, is that this looks much closer to a sort of financial fraud issue than something sort of crypto or blockchain specific. But that doesn't mean that there isn't a lot of work that could be done to safeguard what in fact happened.
And what would you say, Caroline, what would you say to the comment that, and I've heard this sort of touted, etc., that these are open, immutable, transparent systems, that that FTX infrastructure has arguably sort of replicated what we've seen in not too distant history in existing financial services. So how could that happen? How would you answer that question?
Yeah, I think the reality is that we still don't have a lot of the controls, a lot of the experience in some of those safeguards that perhaps we take for granted in traditional finance, and those, the need to sort of transport some of those learnings, not all of them, because there are differences between the two systems, but some of those learnings into this space is still a work in progress. But equally, in traditional finance, as I think you rightly say, it's been around for a lot longer, and they still face many of these issues around financial fraud, for example. I mean, Wirecard, Madoff, Enron, the list is long, unfortunately. And so I guess this is hopefully a reckoning, not just for regulators, that, if the objective is really, protection of consumers, not acting doesn't solve that problem. And equally for industry, that this is kind of a call to step up and really demonstrate what can be done, but can be done in a way that is, safeguarding consumers as well as allowing the innovation.
And there's people talk in lots of different ways about FTX, etc. It's affected the whole crypto industry, let's call it. But I do say to people sometimes it's sort of, it's not really anything to do with the underlying assets. It's not the actual virtual assets. It's the access point to those assets that this has happened at. So nothing has arguably really changed in the underlying tech or anything. It's been that counterpart. So how do you think in the next year, 2 years, 3 years will develop more trust or faith in those centralized parties? Will it be a development or of regulation? Will those levels rise? Will they rise too high? I don't know. What do you think?
Yeah, look, I think that, when I think about like the policy areas touched by crypto, there's sort of 6 or 7 of them. And I think what those areas are haven't changed and won't change as a result of FTX, but the order of priority and the speed at which action is taken will certainly change. So if we think about sort of a pre-FTX world, I probably would have told you that things like market integrity, looking at market manipulation, for example, or maybe financial stability were the major concerns of policymakers. I think from now there's going to be a lot more immediate focus on some of the areas like custody, vertical integration of activities across a group of firms, a group of entities, and some of course the bankruptcy protections as well, and what rights do consumers have to sort of be prioritised creditors in that process.
Do you think the guys or the platforms that are now, there's been a lot of discussion around regulation, etc., a lot of transparency around assets that are held by different, it could be exchanges or platforms, whatever. But is that enough? I mean, if you see the assets that are held on the balance sheet of any entity in the world, is that enough if you don't really know what they're being used for, or if they're being leveraged, or if they're being collateralized, or et cetera, et cetera? Is that a problem, or is there technology to fix that? Is there?
Look, I think that there are going to be sort of emerging solutions to try and address these issues. There's still relatively, and we know this from all different sorts of sectors, when it comes to sort of the intention to defraud, that's still a very sort of human problem. So we can bring the transparency, and we can certainly bring a lot more controls than we have today. And in some regards, we already have the technology, and it's about just putting those processes, that's from the industry side or from the government side, putting the actual requirements in place. So I think we can make some progress, and I think, there will be more rules around, leverage, how you can use customer assets, or more to the point, how you can't use them. But I think we're still very early days, and I think people will start looking around the world at what requirements other countries have in place already in some of those areas, because there is a bit of a patchwork. So you might have some strong custody rules in one country, and in another country you've got some rules around vertical integration. But in terms of like a fully developed holistic framework, there's far fewer examples of that.
Do you think, Caroline, that today, if people looked at a platform, or a week ago, 2 weeks ago, whatever it was, they looked at a platform, I mean, in the VASP context or in a crypto exchange related context, I don't think consumers don't really do due diligence on sort of the regulation of a platform. So what do they look at? Do they look at where it's domiciled, or do they look at, I think they probably do look at who the investors are, because there's a certain presumption that if you're backed by these really big and serious names, okay, well, they've looked at that properly. Is that where the trust used to be? I don't know.
And look, I think the reality is too, consumers also look at just the ease of access. We know this from the privacy world, for example. People tell you they want privacy, and when you present them with a choice between privacy and a smoother user experience, they take the smoother user experience every time. So I think that's also got a lot to do with it. How easily can I access this platform? So there's certainly there's also sort of the consumer education part of this process as well, and how the sort of, whether it be sort of consumer suitability requirements, or really looking at what are the indicators of trust when you're choosing an exchange that you can look to.
Yeah, because it has been difficult. You've seen lots of famous people marketing things in a certain way, then you see 5 big names, and it's sort of, there's an element of more trust, I would probably guess, on that than the legislative framework of a jurisdiction. I think that's
Yeah, and look, there's still, even something as basic as, people think, oh, well, transparency, all the transactions taking place on the blockchain or on a blockchain. But the reality is, when you're looking at a exchange, the majority of transactions aren't happening on the blockchain. Once you're within the exchange, they're happening off-chain. And I think most consumers probably aren't aware of that even fairly basic understanding of what actually happens within an exchange, what happens to their assets once they're sent into an exchange.
And there is now, I'd say now there is already, or to an extent, I'm going to call it a flight to safety. Whether that's a counterpart or a particular asset, or people are moving out of virtual assets into USD, or
into stable coins we're seeing, into personal wallets. So people being concerned about, can I trust?
Well, that's exactly, so that's that, and that is exactly my question now. So where is the trust going to end up? Do you want to move the trust away from that intermediary to that software or to that infrastructure? Will this be a trigger for a move to decentralized finance?
Look, in some ways, but there's still, there, from a sort of usability, perspective, a lot of people are still just not interested in taking that much responsibility for their own assets. They want that to be someone else's problem, and they're happy to pay for it to be someone else's problem. So I think there is still that challenge of adoption of personal wallets. And as I said, DeFi also has a sort of a user access challenge for the most part. There's still, there has been progress made, but it is still difficult to access in many cases. It's not as easy as sort of going on a centralized exchange. You don't download an app and there it is. So. But yeah, we are going to see, I think, some changes in markets, but I think the biggest changes will be in the sort of centralized world, because although, having the option of decentralization, I think, is really, really important. They're not in competition with each other. They serve different markets in the same way that we know that, the people who have been in crypto for a long time aren't the same people who are buying NFTs, for example. Like, these are, perhaps the better way to put it is that the growth of NFTs has opened up a new group of people to tokens, to cryptocurrencies, to digital assets in general, not just the existing population of cryptocurrency users.
Yeah. Do you think, NFTs have other complexities, or we can maybe talk about that, but do you think that, and I keep going back to this theme of trust and the counterpart, if I open an account at a bank in London or New York or Sydney or Singapore, whatever, there's an element of, well, it's a bank and it's regulated. And there's loads of fine tuning between what that means, and there are slightly different requirements. But generally speaking, there's an element of security in that.
Yeah.
When you say you're a centralized exchange, or you're a VASP, generally speaking, you're a wallet provider, it means it can mean lots of different things.
It can mean lots of different, and it can mean lots of different things in how your funds are stored.
Yeah.
It can mean lots of different things about what they've promised to do with your funds. And so there isn't that same kind of commonality of understanding that, if I give these people my money, they've got to hold it in trust and they can't touch it.
Exactly.
People, no one likes reading the long legalese at the end of, where they just scroll to the bottom and tick the box. But that means that, people aren't fully aware of what they've signed up to, I think, in many cases.
And why is that? You're not going to go into loads of detail around the FATF and everything else, but those initial recommendations in 2019, at least they defined what a VASP was, but to comply with those recommendations, really, and the FATF are not a regulatory authority, but it was a very sort of KYC AML focus.
Yeah.
And do you think that's where will things move? Do you think MiCA and everything that's happened in the EU will set new standards, or will things slowly escalate, or has this been an accelerator for all that? I don't know.
Yeah, the reality is that it's still very thin on the ground when it comes to sort of prudential requirements.
Exactly.
AML they discussed it since 2014, 2015. It finally started happening in 2019. We're still a long way from full implementation, as you know, Joey, and that's even just on that narrow bucket of AML KYC. The kind of prudential requirements, custody, which sort of includes fit and proper persons tests and custody requirements and capital requirements, liquidity requirements. This is still very, very early days, and it's really important to see sort of MICA finally getting finalised. Well, I think we're almost there. The final vote, I think, is now put off until next year, but we're very, very close. And that's just so important. Even if from a policy or government perspective, your only interest is in consumer protection, you don't care about the innovation side, you don't care about new use cases. Although I think that's a mistake, but even if all you care about is consumer protection, just either not acting or, worse, banning it, just doesn't work. We know bans don't work. The data is really, really clear.
Why do you say bans don't work?
The biggest example, of course, is China. Banned on and off, and then sort of banned in 2021. This year, in our adoption index, back in the top 10. Fastest growing adoption in the Middle East, Egypt, also got a ban in place. It's the nature of the technology means that, sort of short of shutting off the internet, this is not something you can ban. So as I said, you may not like it as a government. As I said, I think that's probably not the right approach, because there is a lot of positive things that we see coming out of the industry. But even if that's your view and you want to just protect people, including protecting them from themselves sometimes, you do need to regulate. It's just critical.
Is it regular? Will it be, I think it will, but will it be regulation, or is it a question of just, the market determining what's trustworthy and what isn't trustworthy? You use platform or DeFi platform X because lots of people use it and you just follow a trend, or will we get to a stage of people actually understanding a bit more of what it means to be regulated in jurisdiction A, B, C, D, E, F? I don't know.
Yeah, I think the reality is the vast majority of users don't, they've got other things to do with their time, right?
Yeah.
And equally, we don't want people being guinea pigs while people work out, I tried this one, and then it collapsed. We don't want to be putting people in that position. And that's where I think, whether it be industry standards driven by, self-regulatory organisations, for example, or it be enforced through government. You also, you do have market, you have norms, there are these different kind of forces that you have. But those are two really important ones where, if government doesn't take action, industry, this is an opportunity, not a burden. I think historically it's been seen as a burden. Oh, we have to do compliance. Actually, this is like a selling point and a way to open up to a huge amount of people who otherwise don't trust. And they need that reassurance of having some sort of framework in place.
It will be, and it's going to be super interesting. It's going to be interesting. We work, just to put a Xapo hat on for a second. We already operate under requirements to segregate and control customer assets off the balance sheet of the assets of the VASP in our context. And big balance sheet protection. That's also something in the last few weeks. People haven't really looked at that too much. But I think the move to the jurisdictional stuff is really difficult. Some countries move very, very quickly and they produce very developed frameworks, maybe too quickly. And others, the platforms say, well, I don't really want to operate there if the rest of the world is operating outside of that. Yeah. But I don't really know. I don't know. If you put a guesstimate out there for, FTX has happened, you don't need to go into any of the specifics. How would you play out, what's going to happen? This is really difficult. What's going to happen in the next 2 years after that? What is...
I brought my crystal ball, so don't worry, Joey, we can do this.
What's going to happen? What is going to happen? Has this set the industry back a year, 2 years, 5 years, and it'll continue on the same track? Is this an end event for virtual assets as a concept? I don't know. What do you think?
Yeah, look, I definitely don't think it's an end event. I think that it's going, I think Firstly, there's going to be a lot of reflection. I think that's very important. As I said, right now it's early days. We still don't know the full extent of who's affected and the full extent of what exactly happened. So those are going to be two important things. I think it is going to accelerate the regulatory piece, and I think that's quite interesting because from, if we think about crypto natives versus the TradFi sort of world, TradFi has increasingly sort of been dipping their toe in this space. From a regulatory perspective, they're very well placed. This is the world of regulation, of compliance. This is something they know very, very well from working in traditional finance. And so, in fact, for some of them, this is a bit of an opportunity as that regulation comes in, because that's something they can bring to the table. They're not on the cutting edge of the technology. They're not kind of breaking the sort of ground when it comes to new products and things. But in terms of being able to bring, trusted brands, compliance processes and so forth, those are things that they can bring to the table.
And will platforms like Chainalysis, will the services that you offer, is that also evolving and developing? Is it more into sort of, know your transaction type universes? Is that going to help in everything that's happening at the moment?
Yeah, look, I think there's a lot of demand in thinking about, moving on from just investigations or sort of just the kind of narrow lens of AML compliance to really, or supervision of AML compliance from a government perspective, to really think about, well, what other things can the data tell us? How can the data tell us, what some of the exposures might be? Can the data tell us more about what's actually happening in my jurisdiction and what I need to worry about? Are people selling into my jurisdiction from overseas? Because this challenge you're talking about of, I always think like the world of digital assets kind of brings all the challenges that we thought we had with the internet and then multiplies them by like 10. As I said, the project I was working on before doing this was about the platform business model and fundamentally about this issue that you can operate in a country without having a physical presence there. This is the heart of digital assets. And so how do you actually, bring a global approach? And we've seen some interesting attempts, when the sort of, ill-fated, but the Libra project was getting underway, the Swiss kind of developed this regulatory college model. There are ways to kind of square the circle of geographic boundaries in an industry which doesn't have any such concept. But it is going to take a lot of sort of innovative thinking, and it's going to require, regulators to be able to experiment with new approaches, but also industry to help out to kind of come up with the tech to solve some of those problems.
Regulatory innovation is an amazing and sort of fascinating term, and definitely something I always talk about this. Legislation cannot evolve at the speed of technology. Regulation can't really keep track. So it needs new thought process. And I'd say that in the last few months, there's been a much more open conversation around that. I wonder whether this has been a bit of a setback to all of that, the concern with everything that's happening. But let me ask you a kind of specific question around that. So platforms like blockchain analytics firms, what would you say to the difficult question that it's fascinating and incredibly transparent in what can be generated, but it's after the event activity. It's not preventative, or is it? Or can it be preventative?
Look, absolutely, in the sense that, you can see real time the activities going on. You can see if you're looking and if you know where to look. And this is where this education piece comes in, because whether you're in industry or government, as I said, the focus really has been on AML. People haven't been thinking about how to use the data for these other challenges like contagion risk, or looking at issues relating to market manipulation and so forth. So knowing where to look and how to look means you absolutely can get a better understanding of the risk, but it's still a very nascent space. But I think there is opportunity there, and it's going to be a combination of the on-chain data and off-chain data plus reported data. So, and that's the difference between this space and TradFi, which relies very heavily on reported data, always after the fact. Because this concept of embedded supervision is almost still very theoretical in the TradFi space. Here, it's not even so much as embedded, it's just it's there for everybody to see. But it's again, it just looks like a jumble of letters and numbers. Being able to kind of interpret that and give it meaning is kind of where.
And will things move towards, like, I mean, there's a lot of privacy-related arguments, a move against sort of the transparency of these things, lots of different new solutions to try to preserve zero-knowledge-based.
Yeah.
Is compliance also an evolving concept in the blockchain? Are there new ideas appearing all the time? I don't know.
Yeah, no, there is absolutely, and I think, and it is possible to, there is a balance to be struck between sort of privacy preserving, but also being able to meet the regulatory obligations, which I think is important to keep in mind. People always think, oh, this is sort of regulatory, the regulators are putting these on this. But, foundationally, these rules come from a place which are looking to place safeguards for the society that we all want to live in. So they're not inherently bad things. They're there to protect us. Now, maybe the balance isn't always right or the process isn't always right, but it's important to keep in mind, and I think that's where the kind of collaboration between public and private is needed, is like, this is the objective, understand what this objective is, and then think of the innovation is in, like, there's many roads to Rome, and working out, well, don't just have to go the same road that we've always been driving along. We can get there in different ways.
Is there kind of, we mentioned once or twice, we talked about adoption, we talked about some of the sectors or the NFTs sort of particular boom, talked about some of the problem scenarios. I mean, difficult prediction, but if the adoption numbers are extremely high in emerging markets, in the NFT space, and it's unregulated, and no one really knows what's happening on these massive unregulated platforms, and you've talked about market manipulation, is that another area? Is it an area of fascinating opportunity, or is it another area that's problem waiting to happen?
Yeah, there's already some, there's enforcement actions already taking place relating to different types of market manipulation, insider trading, for example, or, wash trading cases, for example. So there is some early steps in that regard. But I do think that is one area where, there hasn't been a huge amount of attention historically, and the focus is slowly coming onto that, both industry in terms of, well, okay, how do I make sure my platform isn't used for those purposes? And also from regulators, well, how do I identify that when it's happening?
Because you guys can see it. I mean, Janessa can see the data. I mean, you hear about NFT marketplaces.
Yeah, we've published some case studies on some of the NFT wash trading, for example, that's taken place. Is
it? Do you think it's something that, from a policy perspective, people are starting to become aware of, but it just sits lower down the Richter scale or the importance list when you start talking about CeFi and massive exchange platforms? Or I don't know. Is it going to be the next thing that comes onto the focus points for?
Look, I think it will be one of them. I think one of the top ones now is going to be custody. This question of custody and prudential requirements more broadly, and then I expect contagion, sort of financial stability risks, both within the sector and between the sector and TradFi, and between the sector and the real economy. And
is that happening? Is that impact already happening now, or?
I think not. I think that kind of the kind of spillover impact into traditional finance, for example, we haven't seen a huge, impact so far. But certainly, we're seeing it within the sector, though. Whether it be what happened, flowing out of, Terra Luna through to 3 Hours Capital, and all the entities that were affected by that, and now obviously with FTX and learning about sort of how wide their reach was. And again, these are things we're still sort of learning the actual facts of. There's a lot of speculation, but certainly there does seem to be a broad reach there. So at the moment, it seems, within the industry to be contained within that. But I think certainly, and I think earlier this year in February, the FSB came out quite clearly to say this is an area where we have growing concerns about, just because of the adoption is skyrocketing, and the interlinkages between the different sectors are growing.
Okay, I'm gonna ask you two last questions. Yeah. The first one is, what do you think what do you think that education and the learning for like younger people or people through whatever it is, school systems, university systems, do you think that's something that's slightly missing or something that needs to be focused on to get to a stage where consumers and users understand the space better? Is that a gap, or do you think that's already happening?
Oh, I think it's definitely a gap, a huge gap. And I think I think the fact it's, even in formal education, we're still very far away from even just teaching people about sort of personal finance generally. So, it's quite a stretch to imagine that they're going to start educating them on digital assets. And even just the sort of materials that are available to learn about this stuff. Obviously, it's changing, and, whether it be sort of TikToks or YouTube videos and so forth, there is things, but you need a sort of a starting point. And if you're interested and go out looking for it, then you'll find something which probably meets your need. But there's not a lot sort of that comes to people organically yet.
And that's and it will make a difference. I think people getting more and more familiar, understanding things. I've heard you and we all talk about people actually using the technology or doing something themselves as the best way to actually learn what this is, and,
it is.
And not learning via Twitter.
And I think, when you're not just digital native, but sort of your concept of digital is very different for younger generations, in the sense that you have this idea. We often talk about, well, we do things on Zoom, for example, and then we do them in real life. But for the younger generation, there's not such the division. You either things in the virtual world and things in the physical world, but they're all real life. And so I think just that shift means that concepts of digital assets and thinking beyond crypto to, tokenized art and so forth is not such a bizarre concept. It's like, well, of course this has value, because I spend my, a significant number of hours of my day in this virtual world. So yes, that has value.
And then the last thing. So where we've lived like the last few weeks, problems, we've talked about them, etc. That's been a setback. What do you think what's going to happen next? How long will we take to get back to where we were 2 weeks ago? Will that be 6 months, 12 months? Just a guesstimate. Or what do you think the next 6 months are going to bring in terms of focus? Is it going to be managing contagion? Is it going to be regulatory sort of enforcement? Is it going to be development? I don't know. What do you think the next 6 months have in store?
So look, I think on the sort of policy regulation front, there'll be a lot of conversations. Regulation moves slowly. And there'll be a lot of conversations, and the kind of the priority areas I mentioned are going to be the kind of the focus there. Are we going to see sort of significant new regulatory developments? Probably not in the next 6 months. We're going to see some interesting things, I think, out of some of the international groupings like IOSCO and the FSB and so on and so forth. But actual sort of concrete requirements, I think that's going to be a little bit slower, more in the sort of 12 to 24-month time frame. That's an opportunity for industry, though, as in the opportunity to step up and offer concrete solutions as an industry as a whole, not just individual sort of companies doing things, but really doing something collectively. So I think, that's important. In terms of rebuilding trust, I think that is going to be an ongoing process, which, isn't going to be finished in sort of in 6 months. I think the reality is, though, that there are some really strong use cases, and I think people who are involved in those, who access those, aren't going to be deterred. They're going to understand, but it's really going to be about the new users and opening up this space, whether it be new retail users or the institutional space. But I think the reality is the greatest barrier for the institutional space still remains around this sort of regulatory clarity piece.
I think that's good. I completely agree. Kind of, there's loads more I could talk to you about. I'm going to say one last thing. You were very, very young. You didn't quite make it as a Maverick astronaut. You made it in the OECD, and that was awesome, that base layer. And then I think what you're doing now is fantastic as well. So I hope you can continue pushing on the front end, and we'll all be here to help.
Thanks a lot.
Thank you very much. Thanks for watching Mavericks, brought to you by Xapo Bank. Please like and subscribe for more episodes.